Did you know that the aggregate market cap of Canadian real estate investment trusts decreased by $3 billion over the past year? Welcome to the Multifamily Real Estate Insights podcast. I'm your host, Sandy MacKay. Let's get right to it. Today, we're diving into the world of Canadian real estate investment trusts, or REITs, as we explore the ups, downs, and major deals that have shaped the past year. According to a recent article by Steve McLean from Real Estate News Exchange, the Canadian REIT market has been a roller coaster ride. While the sector has seen some recovery from the lows of 2023, it still trades at an estimated 14% discount to net asset value. This is a significant departure from the long-term average discount of just 2%. During the closing roundtable at Rail REIT held at the Metro Toronto Convention Centre, industry leaders shared their differing opinions on the state of REITs. Kelly Honsick, the chief executive officer of Nexus Industrial REIT, voiced concerns about the public market REIT space, describing it as broken due to stocks trading well below their net asset values. Meanwhile, Jonathan Gitlin, president and CEO of RioCan, expressed optimism, stating that despite the challenges, REITs provide stable cash flows and represent real value. David Holden, managing director and co-head of Canadian Real Estate Investment Banking for RBC Capital Markets, provided an overview of the market, noting that Canadian REITs have bought back over $1 billion worth of their units in the past year. Interestingly, while the Toronto Stock Exchange Index delivered a 27% total return, driven largely by technology and financial sectors, the TSX REIT Index provided a modest 3% return. However, seniors housing REITs stood out with a remarkable 34% return. Holden also highlighted the positive aspects of the REIT sector, mentioning that operating performance remains healthy, leverage is declining, and liquidity is robust. He emphasized that the Canadian bond market's love for REITs and the potential for capital to rotate back to the sector is a hopeful sign for future growth. The alternative, he suggests, could be more privatization activity or changes in how people access REITs. In terms of noteworthy transactions, the Canadian market saw significant activity. Go Residential made waves with the largest REIT initial public offering in Canada, bringing a portfolio of luxury high-rise apartment buildings to the Toronto Stock Exchange. Meanwhile, the market also saw the exit of some REITs through acquisitions, such as Morgan Properties' agreement to acquire Dream Residential REIT, in a deal valued at approximately $491 million. The Skyline Report, released on Tuesday, September 30th, 2025, by Arvest Bank, in collaboration with the Center for Business and Economic Research at the Sam M. Walton College of Business, University of Arkansas, highlights significant movements in the Northwest Arkansas real estate market. The report reveals that home sales and average prices have risen, while the multifamily vacancy rate has ticked up slightly, yet remains healthy overall. Home sales in Northwest Arkansas increased by 5.2% to 5,049 homes in the first half of 2025, compared to 4,799 in the same period in 2024. However, this marks a decline of 5.4% from the latter half of 2024. Notably, this is the first time since the inception of the Skyline Report in 2004 that consecutive half-year periods have seen over 5,000 homes sold. This remarkable achievement underscores the region's robust housing market. In terms of pricing, Benton County witnessed an 8.9% increase in average home prices, climbing to $471,427 from the previous year. Washington County saw a 7.2% rise, reaching $417,489. Madison County experienced the most significant increase, with average home prices soaring 25.7% to $321,676. These figures highlight the strong demand and limited supply that continue to drive up housing costs in the area. The report also notes a rise in building permits, with a total of 2,929 permits issued in the first half of 2025, marking an 11.3% increase from the previous year. However, This was a slight drop of 2.59% from the second half of 2024. Sales of newly constructed homes accounted for 36.5% of all home sales, emphasizing the importance of new construction in the region's real estate dynamics. On the multifamily front, the vacancy rate in Northwest Arkansas increased to 3.7% in the first half of 2025 from 3.3% in the same period in 2024. This increase is attributed to the introduction of 7 new apartment complexes, adding 639 units to the market. Despite this uptick, the vacancy rate remains below 5%, indicating a healthy market overall. Interestingly, Siloam Springs had the lowest vacancy rate at just 1%, while Bentonville experienced the highest at 6%, primarily due to the addition of 3 new complexes with 347 units. Mervyn Jebaraj from the Center for Business and Economic Research pointed out that the slight rise in vacancy rates is largely due to the time needed for new units to be leased, suggesting a stable demand for multifamily housing. However, the report highlights a concern regarding infrastructure, particularly sewer capacity, which is becoming a limiting factor for residential development in several cities. With new construction driving home sales, the infrastructure challenge is one that local governments will need to address to sustain growth. Overall, the Skyline Report demonstrates the strength and resilience of the residential and multifamily real estate markets in Northwest Arkansas. As the population continues to grow, the demand for housing remains strong, supported by innovative mortgage products and local services, as noted by Maria Lau of Arvis Bank. As we look ahead to 2026, the multifamily industry is gearing up for a robust schedule of conferences and trade shows, offering valuable opportunities for professionals to network, gain insights, and stay ahead of the curve. Julie Strupp from Multifamily Dive provides a comprehensive overview of the key events that will define the year for multifamily pros. Kicking off the year, the Cultivate Conference will take place from February 17th to 19th at the Kimpton Ayrton Hotel in Nashville, Tennessee. This event, organized by the National Apartment Association, is designed as a senior leadership retreat, offering a platform for peer networking and addressing pressing industry challenges. Heading into April, the AOA Million Dollar Trade Show and Landlording Conference will be held on April 16th at the Los Angeles Convention Center. Hosted by the Apartment Owners Association of California, this biannual event attracts a diverse group of multifamily professionals, including portfolio and property managers. Topics such as real estate tax strategies and legal risk mitigation will be covered. In May, the Apartment Innovation and Marketing Conference, scheduled for May 3rd to 6th at the Hyatt Regency Huntington Beach Resort and Spa in California, will focus on marketing and leasing technology, automation, and artificial intelligence. This conference is exclusive to owners and operators of multifamily communities, providing a specialized environment for expert discussions. The Urban Land Institute will host its spring meeting from May 5th to 7th at the Music City Center in Nashville. This event is targeted at real estate professionals committed to shaping the built environment and will feature networking opportunities, education sessions, and local project tours. Later in May, the Building Innovation Conference 2026 will occur from May 18th to 20th at the Ritz-Carlton in Tysons Corner, Virginia. This annual event, organized by the National Institute of Building Sciences, brings together government agencies, building professionals, and scientists to discuss improvements in the built environment. As we move into the summer, Apartmentalize, organized by the National Apartment Association, will take place from June 17th to 19th at the Ernest N. Memorial Convention Center in New Orleans. This annual education conference draws professionals from across the multifamily operations sector, providing comprehensive learning and networking opportunities. In the fall, the Blueprint Conference will be held from September 22nd to 24th at the Venetian in Las Vegas. This global event is aimed at real estate and construction tech startups, multifamily executives, and investors, focusing on innovations that are transforming the built world. Closing out the year, the NMHC OpTech Conference and Expo will take place from November 16th to 18th at the MGM Grand Hotel and Casino in Las Vegas. This conference is operated by the Real Estate Technology and Transformation Center, NMHC's affiliate organization, and will cover multifamily technology and operations, including sessions on intelligent buildings and prop tech. These conferences represent just a selection of the many events planned for 2026, each offering unique insights and opportunities to connect with industry leaders. As always, it's essential to check the conference websites regularly for updates, as details and dates may change. Thank you for listening to the Multifamily Real Estate Insights podcast. I'm your host, Sandy MacKay. See you on the next one.